welcome to the show. We've got Daniel Scagnelli. Did I say that right?
You did, yeah.
Should ask you that before I said let's start. Okay. With Springlys. And yeah, I think what I'd love to talk about is sort of your journey individually, because you've been, part of a number of different startups and what that's been like in a market like ours, which is the kind of the Raleigh-Durham Triangle, North Carolina, Southeast. We are, representative of many non-major places. So it's a tough life to live because we got a lot of good companies. They're all growing, but, kind of capitalization and growth, and they don't all scale to unicorn status. So it's a tough way to bang out a living. But for those of us that kind of stay with it, we do it because we enjoy it. So I'd love to hear about that. And then we'll talk about, the future kind of payments and where you're, the company you have now or with now is Springlys, which is sort of started, I think 15 years ago, and then, bootstrapped, I think, and then bam, raised like $50 million last year, like out of nowhere. If you are just sort of an outsider looking in and being like, oh, who's raised some rounds? Like, wait, what? So that's a big news. So we'll kind of talk about that. But I guess that's a little bit of a tee up. But why don't you, kind of tell us about yourself and what you're working on and a little bit of that story, and let's go from there.
Yeah, that sounds great, Nick. Thanks. And excited for the conversation today. So as you mentioned, I'm currently at Springlys. Springlys, a payments orchestration platform, really an infrastructure for payments optimization. So we kind of sit between merchants and their payments processors and help them optimize those flows to drive better user experience and cost efficiencies in their business. And I've been there for about 2.5 years. I currently head up solutions engineering and professional services. I've had I would say, very non-traditional career path that led me up to the point of payments technology. So rewind way back, I spent some time in undergrad, was focused on business and did some sales and early gigs out of school. Then actually went back and pursued a master's degree in clinical exercise physiology. So spent a number of years on the practical side of healthcare and corporate wellness, and sort of fell backwards into technology. I was at the time working for a very large managed services organization that we were a subsidiary of a very large insurance group and conglomerate, and we cater to Fortune 500 companies doing all of their global health engagement strategies, wellness programming, and population health management. And through that, we were developing a new pop health management platform, and started to dip my toes into the world of technology, gathering customer feedback, and ultimately joined the team that took that to market to our customers and to acquire new business. And that was actually how I kind of pseudo learned about Validic in downtown Durham at that point in time. I've always had an entrepreneurial spirit and wanted to work for a startup and be part of something where, I could put my fingerprint on the DNA of a company and help be part of growing something. And I think this was shortly after Validic had taken a seed round from Mark Cuban. So there was some Triangle Business Journal news going on. And it just so turned out the company I worked for was an early adopter of Validic. We leveraged their technology to get health data off of wearable devices and into our platform to monitor the health status of the patients that we were serving. So use case fit for me, and met the team over there and went and spent about 4 years growing with Validic. And then from Validic, went and spent some time working for another startup that was based in San Jose, focused on kind of straddling the fence between the fintech world and health. So it was an insurtech platform that catered towards life insurers and brought health engagement strategies to help life insurers better connect with their program members and participants. And through that, found Springlys. So yeah, it's been a very non-traditional, backwards way into technology startups, and now the payments world, which is fascinating, changes every day. So no shortage of learning opportunities.
Cool. So if we stay on you for 1 second, your focus has been on, I guess, elaborate partnership and ecosystem growth, business development. You've come in and it's been your job to help the businesses grow. Is that accurate, or feel free to sprinkle a little extra insight there?
Yeah, good question. So my focus has been more specifically on the post-sale customer lifecycle with those businesses. Spent some time with Springlys acquiring new business and helping grow the enterprise footprint and acquiring new customers. But both in my time before the startup space with Validic and now again in my role at Springlys, really focused on, we've got customers, how do we deliver service, operationalize the business, build repeatable and scalable processes and teams and organizational infrastructure that, can grow from 30 to 100 employees to 500 employees as the business scales.
Okay. And I never know where these conversations are going to go. And sometimes it's a little wide, sometimes it's deep, sometimes it's a little bit of both, but maybe keep going. I mean, why is post-sale customer lifecycle important? And I also heard, helps grow teams from 30 to 100 or 100 to 500. So it obviously sounds like that's a big opportunity for companies to extract more growth from the work they're doing on the product development and new customer development. Is that accurate?
Yeah, it is. And I mean, so your first question, why is it important? Whether you're a brand new company or you're a legacy player that's been in the market for 30 plus years, or you're catering to SMBs versus the enterprise side of the business, it's critical that your customers receive value from the product that you're delivering. And so by focusing in on the customer journey and really understanding what happens post-sale, especially in technology-driven products, which, Validic as an example, and Springlys, we're enterprise APIs as a service. So our buyer personas are very technical, our users are technical. So that developer experience is extremely important, and really making sure, once we bring on a new customer and acquire their business, how do we continue that journey for them, get them seamlessly onboarding, realizing value from the platform as quickly as possible. So that's key. Yeah.
That's great. Yeah. That is funny. I guess, a number of your experiences have some similarities. You sell an API. Tell me about the customer type that buy APIs, more or less.
Definitely developer centric for sure. And it's interesting now having, had experience in two very different but similar industries. I spent a little over a decade in healthcare and healthcare technology, ultimately selling and servicing to engineers within the healthcare space. And now in payments, likewise, we're selling and servicing to a very technical audience for the most part. It's really interesting because obviously the buying cycle is different. How technical folks think through problem solving and making decisions, especially when choosing a service provider, is very different than selling to a business-centric buyer. It's interesting too, because not just at a technology level, what I've learned now being in payments for a couple of years is the similarities you can connect between the industries and how that also helps benefit a business and that's trying to grow and establish themselves in, a niche that's essentially a nascent part of a new market. So healthcare trodden with regulation and sluggishness, especially from legacy players, very commoditized market in some ways with very little disruption. Payments, likewise, obviously has been around forever. It's central to what we do, just like healthcare. A lot of regulation. You might compare HIPAA to PCI compliance in some ways, and then the rate of innovation, I think, is what's starkly different about payments, and that's what's really exciting. Is change can be inflicted a lot faster. There's a lot going on, especially as we've seen with COVID over the last year. digital commerce is booming. Just digital commerce alone last year exceeded $4 trillion in 2020. That was like 23% year over year growth. So that's fun and exciting and a nice like break in the mold. But obviously you can benefit from the similarities that you learn through your experience.
Yeah, no, that was great. It kind of went from APIs to commonalities in like regulatory challenges, healthcare and fintech. And then you sort of like kind of gave us like a little bit of an aha, or that's unique insight that I haven't thought about or heard before, which is that kind of the fintech, is it fintech in general or just payments, but is innovating at a much more rapid rate than healthcare. And so maybe add some clarity and cite a source, because that feels like very like newsworthy. But also, if you have one, it's not like anyone reads this or listens to this. But if they did, we would lead with that, right? And why do you think that is?
So, why do I think there's more innovation happening in payments versus healthcare?
Yep.
So, I think there are multiple factors, and it's not that innovation isn't happening in healthcare. I think innovation within healthcare tends to be stifled. You've got behemoth, monolithic hospital organizations. So for instance, there's about 800 hospitals in the United States, approximately, give or take, and it's been a few years, right? But of that, the large players that focus on innovation, I think are less than 5% overall. And so that's a very small sample of a huge market that's focused and has the money to invest in innovation. And I think a lot of that comes from the regulatory side of healthcare, the political drivers behind healthcare, and how it's hard to plan because you never know what's going to happen 4 years from now or 3.5 years from now with respect to new laws and regulations and policy that impacts how hospitals make decisions. And hospitals in the United States tend to be bottom line driven. So they're very much focused on, how to drive revenue, how to improve efficiencies, and a lot of times investing in new technology and things that are innovative within healthcare fall by the wayside because it requires capital investment that those organizations aren't willing to make. Whereas in payments, innovation is an asset to the business, both merchants as well as payments institutions, banks, financial institutions themselves. There's a bottom line incentive for them to focus on innovation and to drive change. And, that's really because one of the elements is consumer is driving change in payments, whereas in healthcare, consumers should be arguably driving change, but the organizations aren't as responsive to that. Whereas, what we see in payments today is consumers need and want to be able to pay how they want to pay, when they want to pay, where they want to pay. We all, we've been spoiled by the Amazon experience, and that's what we expect today. And in order for me to fulfill a transaction, especially in a digital world, on the web, on my phone, I expect it to be easy. And that requires businesses to support, the types of payment methods that are in my wallet and that the brands that I've associated myself to, and it's got to be easy. So businesses are forced to innovate, and the financial institutions that need to capture those transactions have to respond, or they're going to be, their share is going to be eaten out by new players that are able to move faster than them.
Yep. So I guess it seems like maybe that was a deep question, but it's sort of the same answer. Well, actually, one thing you didn't add into that, which is the incentive or perverse incentive model of healthcare, when they're not incentivized to do things better, cheaper, faster, because they would maybe have lower reimbursement rates, or it's fee for service or sick care. Whereas payments, if there's someone can innovate on that quickly and displace a competitor, the model is suited for innovation. So I guess, if we accept that as obvious, whereas healthcare, there has to be like business model innovation before just innovation. Mm-hmm. Is there anything noteworthy on just the regulatory front? Is FINRA less onerous than HIPAA, or is it just more of like the business model sets them up to kind of point one at innovation and one at I don't know, stagnation or one is like, what's the metaphor where you just want it to lean, right? If you just create a little bit of lean, it's all going to start rolling downhill. And HIPAA, it's a lean against innovation, and it's just like ever so slightly, the other is pro innovation. Is there any comment on that?
Yeah, great question. So there are extreme differences, I guess, in how regulations are levied upon, the players in those different industries. So HIPAA is directly impactful to any healthcare organization, and they've got to own that themselves. Hospitals don't get to just outsource HIPAA, right? Whereas in the payment space, especially within the United States, the primary regulatory aspect isn't actually federal in nature. It's PCI compliance, payment card industry, which is set down by the payment card networks themselves. So it's not as regulated from a government standpoint, and you can outsource it. And that's actually where businesses like Springlys provide a lot of value to merchants, because it's not easy for mom and pop shops, or even enterprise businesses for that matter, to comply with PCI. It's expensive, it's monotonous, and it takes their focus away from their core competencies. But players like Springlys can come in and help alleviate that burden from those companies. So it actually, in some ways, the way that regulation is imposed, especially in the United States, opens up opportunity, whereas it's prohibitive in the healthcare domain. That it's a little bit different, especially in more international markets. The more local you go, certain areas of Latin America, the EU, for instance, right now is dealing with PSD2, which is Payment Service Directive 2, which imposes legislation in terms of how consumers' data should be protected. Very similar, kind of the precursor to CCPA here in the United States, but that means financial institutions and merchants have to comply within more rigid structures. Especially here in the United States, it's very different.
Cool. Well, that's sort of an interesting little twist and turn that this convo has taken. I know way more than I did before, so that's good. And regulation we think of as bad, but in general, there's a time and place for it to keep sort of the get some bumper guards, I guess, some rails on the track, or I guess I'm messing up that metaphor, but we don't want it to be totally wild west when it comes to people's personal information as it relates to their health or their financial well-being. So I guess good that there is regulation. If you think about like blockchain and the crypto space, what are your thoughts, and how does that impact sort of the future of kind of the payments industry?
Yes, blockchain. I have lots of thoughts on blockchain.
That was such a huge question, by the way. But I suck at being an interviewer, so
right.
I'm good at talking. I'm not good at asking questions. Let me try to make that better. We just talked about regulation, so maybe we step into it via the regulatory lens, which is there is no rules, man. Because it's all decentralized. Right. It's not in sort of some fiat kind of thing. But go ahead. Yeah, let's start there.
Yeah, I think looking at it through that angle, that's one of the biggest barriers to adoption of blockchain, is that there's a lot of regulatory uncertainty around it. So one of the things I like to say is, blockchain is like a great solution chasing and searching for the right business case. It's a hot topic at payments conferences. It was a hot topic at healthcare conferences, and across a lot of industries. But I think that uncertainty and it lacks a bit of the proof in the pudding, so to speak, so far. So there isn't trust, especially in the payment space, to force adoption. That can be caveated, though, by there are some, I guess, depending on your perspective, relative early successes in the form of Bitcoin and Ripple and other players who have innovated with blockchain, specifically within the payment space. But I think it's my personal point of view is that it's probably going to be a little while before you see mass scale adoption from the financial institutions, especially the legacy players within, fintech more broadly across the world.
Yep. So that's interesting. Again, another similarity, which is hilarious. It's like healthcare and blockchain will be huge. Payments, well, obviously payments, fintech, blockchain, huge. And it's a big deal at a conference. Maybe like, tell me what's been such the big deal at the conference, and what have all the then sort of like boots on the ground industry people, like leaders of actual companies, left saying? You sort of hinted at it there, which is like, oh, it'll be a couple of years, but what specifically, what's too far out? What's maybe more near term for kind of the lay person to get their arms around it? Well, technically, like, not the maybe total lay person who doesn't know what Bitcoin is, but everyone should know what it is now. But anyways, what's the word on the street?
Oh, yeah. I mean, I have a great friend who likes to talk about the good idea fairy and, the next bright, shiny object. And I think for a lot of folks, blockchain, practical application of blockchain, especially like directly impacting consumers at scale, is a bit of a good idea fairy or a bright, shiny object at the moment. So that's I think there are some really interesting use cases for it, but that's kind of the takeaways, at least in my recent experiences over the last couple of years and walking away from those conversations at conferences, has been, I think especially like if you look back, I can't remember the exact statistics, but I remember when I was still in healthcare, there was a study, this was probably 5 years ago. It was like a PwC or an Accenture study that, talked about less than 5% of hospitals at that point in time were, had adopted or tested anything with respect to blockchain, but they expected that to grow to beyond 50 within the next 3 years. And there was a similar study about payments just a few years ago when I first came into this industry that was like, approximately 10 to 15% of banks are doing something with blockchain today, but by 2020, that's going to be closer to mass adoption, and just hasn't taken place. And I think that's because it's still just as volatile and uncertain as it was 3 years ago and 5 years ago at this point.
Yep. Yeah, I was in a Clubhouse room yesterday talking about Bitcoin specifically, how high it will go. And it's amazing the level of sophistication of people that are in the space. And especially as a financial like instrument, store of value, security, whatever we want to call it. But there is this kind of other piece to that of like the functionality has yet to even come online, right? And one comment was, we'll either be in a world where Bitcoin is zero, or value is measured in sats, not dollars. So like, to me, I was like, wow, is that supposed to be like a good sign for like the little fractions of Bitcoin that I'm holding or not? But I mean, I guess the point is like, you got all these smart people who understand it very deeply from a theoretical level. And it seems like they're even like okay with this fact that like the actual implementation of using it as a payment network or using it as a payment system is just like this future like thing to come. How are companies in the space sort of anticipating that? Is it just sort of wait and see, or are you kind of trying to proactively think about, obviously you do digital payments, so digital payments with digital currencies. Mm-hmm. Was there, without disclosing anything super top secret, how are companies in your space sort of trying to anticipate what seems to be inevitably coming?
Yeah, great question. So I'll start on the Bitcoin side of things. And, I think the industry as a whole is definitely in a wait and see mode, like reflecting back to that study I referenced, I forget again the exact statistics, but I would venture to guess it's approximately the same level of adoption. But you are starting to see some big players jump in and invest and take some risks. Last year, JP Morgan went live with JPM coin. So that was, a huge, I guess, positive signal for Bitcoin and blockchain in the US. And likewise, there's been some of that throughout the rest of the world. China has latched on actually en masse. So I think if there are early successes there, you'll start to see some fast followers come on. And then, of course, obviously, like right now, I forget. All I know is Bitcoin value has never been higher, and so there are a lot of new millionaires potentially out on the street. So the more of that happens, I think you'll start to see some critical mass form. That's the beauty of fiat currency, right? And so, but how do especially businesses like Springlys and players in the payment space forecast for that and think about the future? We get asked a lot, or occasionally, I guess is probably more accurate, about, Bitcoin. Will you support it as a payment method, or what have you? And, that's further off of our radar. For us, it's, we really try to focus in on, the active and emerging trends. And so somewhat tangential to Bitcoin is just the proliferation of local payment methods. In the US, that started with the Apple Pays, the Google Pays, Amazon Pays, PayPal, the world. But in other markets, they, those types of payment methods vastly exceed credit card usage. There's OXXO in Mexico and Boleto in Brazil, direct debit use in the EU. And the growth rate behind those local payment methods is extremely fast. So those are things that we as a business and other payments companies have our eyes on. It's really ultimately about the consumer demand. How do you want to pay for what you just bought at your favorite online shoe store? And how do we keep those consumers happy and reduce friction in the checkout? Bitcoin is not quite there as that preferred method of payment at the time of checkout yet. So
yep, that's right.
Yeah,
that's right. So yeah, it's sort of like the functional practical implications and applications. And so and I guess I think similarly, which is, there's all these token projects, there's all these companies that are, on blockchain and have this sort of token system or integration or something. And I philosophically believe these are all great and that they should work. From a practicality standpoint, there's still a lot of usability issues. It's hard to use. It's very confusing. Sometimes I get scared. I'm like, well, damn it, this shit crashes. And I lose this one 12-word string that I kind of wrote down in a safe place. I'm just out all of this investment of time, even if it's like a product. And it's not, I feel like, and I've heard other sort of kind of contemporaries and obviously even, luminaries kind of say, it's going to be mass adopted when you have no idea it's even a part of something that you're using. Right now, it's very clear, right? This is the thing based on, but for blockchain, right? Use my search, but get a coin instead of nothing, or, hey, listen to my music player, but artists get paid per second versus Spotify where they get ripped off. It's that's the only value, is that it's the same, but there's a blockchain piece that may or may never give value to you. So I think as we get kind of more practical applications, and we got to find where the real benefit is and make that real seamless. But I'm a huge fan. And I think, kind of from that, economics degree that I have, I almost didn't get it. I had to pull one of my grades up just to have that class count. So I didn't know that, man. I think you had a C to have it count towards a major. And it's sort of last semester of my senior year, I was like, I don't think I'm making this, but I made it happen. I pulled it together. It still made the dean's list, I think, because it's an average. But I like sort of that sort of high philosophical piece. So, okay, cool. Well, good. You touched on that. Tell me about, trends that you're seeing right now in the payments. And we covered this a little bit offline a couple of weeks ago, but, businesses, small business, not necessarily industry speak for industry people, but for sort of the communities and that you guys serve or want to get into serving. I know it's sort of, whether it's SMB or mid-sized businesses or companies kind of moving from a physical to a digital infrastructure, or are you just displacing, is it always just sort of you're RFPing? Well, that's a bunch of questions all at once. Uh, who are your customers maybe? And you might have said that, but it's tucked into several other answers.
Yeah.
SMBs, sort of people, is it sort of transformation from digital to, or physical to digital infrastructure? Or is it all sort of digital natives and you're kind of just working to be better than competitors, but in your, so I guess, yeah, let's start there.
Yeah. Yeah. So from Springlys perspective, we focus, on the card not present, to use the industry term. So the digital or the online e-commerce payments world. We're not really involved in the on the brick and mortar side where the card is present in the transaction. And so in terms of the breadth of the customers we serve, Springlys has over 500 customers doing business in over 100 countries today. And that ranges from brand new startups that may have even launched a digital business during COVID to some of the largest enterprises in the world. And so the nice thing, and what's really cool about both payments and the type of service that we provide as a horizontal service provider, is that we get to see all different kinds of businesses, large and small, and across different industry verticals. And for us, we do see some clustering in, digital goods space. So streaming service providers, gaming, media subscriptions. We also work with a number of ticketing and travel organizations who, unlike the digital commerce and digital goods side, felt the impacts of COVID differently. And then we also work with, a number of kind of gig economy services. So ride hailing, bike sharing, delivery services, those sorts of businesses. So it's actually a really, really interesting customer mix. And I think, I don't know, if I had to boil it down to your question around trends, there's commonality across that broad swath of folks that we work with in, I don't know, like 4 or 5 areas. So even pre-COVID, but especially over the last 12 months, there's been a massive explosion in just the digital commerce world in general, mobile and e-commerce. And that started before COVID, but especially as, brick and mortar, especially on the SMB side of the market, had to move out of retail and online and offer omni-channel experiences. It's exploded. And, what we're seeing is high growth, especially in cross-border purchases. So especially outside of the United States and within Europe and other areas of the world, there's a tremendous amount of commerce now happening across lines that didn't happen 5-10 years ago. So that's really fascinating. I think Luxembourg, for instance, it's amazing, like almost 3/4 of all the commerce that happens online there is cross-border. So folks buying goods from outside of the country, which is really, really fascinating if you think about it and what that actually means for the local economy there and all the downstream implications. So that's one key trend that then has, I think, lasting impacts on some of these other key trends. So with that, user experience is a key focus area. So I think in the past, what we saw in payments was businesses did payments because they had to do payments, right? Like you needed to get paid, but that was it. That was all you focus on. Now there's so much competition in that space. If you spin on the checkout page for, I don't know, how long is your patience? 20 seconds, 30 seconds,
geez. Yeah.
Right? At best, you're going somewhere else. So how do you streamline that process, make it as efficient as possible, friendly as possible? That's a huge focus, so for a business like Springlys, there's a lot of value in terms of how we help folks make connections and optimize their infrastructure to improve user experience on the front end around payments. And so I think, the underlying theme there is just trends around payments efficiency. So as folks now have to focus more on it as not just a need to have to get paid, but something they need to invest time and energy and thought, payments has started to have a very distinct maturity curve, much like other aspects of traditional businesses. So, you do it early stages because you have to do it. And then it kind of grows into something more that businesses are productizing. And then, on the complete opposite end of the maturity curve, we're seeing businesses that say, hey, we're not only going to productize it and give it focus, but how do we turn payments into a strategic asset for the business and use it something that isn't just a cost center, but maybe drives revenue for the business. And so that's been really, really interesting to see those trends over the last 2 years.
And how would you say it drives revenue for the business? Just because people ultimately, customers of your customer, will have a better experience and therefore have more confidence and more likelihood of buying repeatability?
Yeah, exactly. That's a great example. Or, for a company that may have grown through acquisition, that's now, having to piece together 30 or 40 or 50 different subsidiaries and all these bespoke payment systems, can they invest and create, some centralization and standardization that drives business efficiencies? And then, how does that translate on the consumer experience side? So, if they invest, maybe that looks like a shared wallet. So now, as a consumer, you can buy across all of those different portfolio companies and help tie that, that one payment, that stored payment credential to purchases across all of them. So by linking the two together, you're able to drive revenue across the portfolio, whereas before you had walls standing between those things.
How far is your reach in something like that? Because that clearly would be a trend. I mean, so I guess it's that's clearly a trend in usability. And we think about these big things and it's oh, well, blockchain, man, if you decentralize the processing of this, you're going to be your transaction speed, blah, 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 your gas, that's too hypothetical. If it just happens faster, that's great. So start there. If this happens faster, it's better. That's a basic thing. That's sort of a first principles kind of example, right? So it's just make it a little bit quicker. Don't have a spinny wheelie, because then people might hit the X button and then either they got charged and you have a chargeback and an unhappy person, or they didn't, or they bailed, or they thought they got it and they didn't get it. So let's just avoid all that. It's kind of a basic block and tackle. But yeah, carrying forward your credentials across different things and easy usability and easy checkoutability. How far can you go? Obviously, Apple Pay follows me around everywhere. And some of these vendors seem to be integrating, either Apple Pay or Amazon Pay or every kind of thing under the sun, where it's easier and easier just to buy something on the internet. For your customers, how far can they take it? Is it just sort of in their properties, or are any of these things storable on a device that are tied to yours? Or how do you kind of plug into, people's, what they've gotten and where they are when they're shopping?
Yeah. So from Springlys' perspective, we're an enabling technology for accomplishing the things that you just talked about. So a company might use us to establish, what we call an independent card vault. So they can centralize all the different cards and payment methods that their consumers use in one single vault. And so through that, then they can be used across any different processor that they work with, but also it means that payment credential could potentially be used across any client side application that they have as well. So, in that respect, the limitations are really pretty low. From Springlys' side, it's more, how do we help our customers, accomplish whatever their business goals are? So for instance, if I was a conglomerate buying up a bunch of different subsidiaries that had, strong consumer presence, if I wanted to establish that, one central place for you to buy and use your single stored card like Apple Pay across multiple places, you could do that with Springlys. It's more as a business, is that what they're trying to do? And I think that's like kind of going back to the maturity side of things, that's where we're in this state of change with respect to how businesses approach payments. And that's what's really interesting. So there's a lot of opportunity for companies to, use the buzzword digital transformation. There's a lot of opportunity there for companies. So just getting them to actually adopt that change is really where we're at in the journey right now.
Well, and then who is that company that has the ability to really transform themselves, like as a persona or archetype? What kind of company are we talking about?
Yeah, I think we see it in a few different flavors. So, think about, any legacy business that may have historically been selling either brick or mortar or, selling services in a not online capacity, and they've recently brought services online. I think like my mind immediately goes to like the fuel space, right? Historically, you've always paid at the pump, right? Stick your card in the reader. There's tremendous amount of fraud that has to get fought there. Terrible experience. Well, now we're starting to see payments move into the vehicle itself with intelligent vehicles. So now all of a sudden payments becomes important to Ford, right? Because as a car manufacturer, to deliver the consumer experience your buyers want, you've got to have these embedded technologies, including you want to order ahead for coffee when you're pulling up to the next BP station. So Ford needs to work with BP to put that infrastructure in place, or the entities in between that can connect those dots. Or, when you stick the handle in to get gas, you've already paid, or you just drive off and the payment happens automatically without ever having to stick a card in and have a scammer take your card there. So
yeah. Well, that's interesting. So yeah, because I'm thinking like, oh, it's digital, like a better checkout button on the website. But if you and the leadership team at Springlys are sitting there like, okay, it's our annual offsite in the woods and we just dropped acid, I'm just kidding. It's really like kind of non-conventional or not, ways of thinking about payments, because you just really need a digital transaction to occur. In a way that isn't so there are like kind of exponential improvement possibilities out there. Like Ford is a payments company, could be a payments company, and they're a processor and it's their wallet, right? It's not like, oh, I've got, I just need a better credit card thing at the station to stick it, or whatever. So I think that is an interesting. What else is it like that? What are some other examples of areas that are quasi, non-traditional, but might, kind of change how people are thinking about payments? Yeah.
So yeah, like the one use case I mentioned, consolidation, and delivery services is seeing a ton of consolidation as demand for delivery services is going up. So, if you're a portfolio that has one delivery service in Latin America, another one in Asia Pacific, in Europe, in the United States, after all these acquisitions, you're creating one central wallet, so that that way when you fly, Nick, from the US to your next business trip in Europe in 2024, you can use their service provider there and seamlessly pay for your delivery service without having to add a new card or download a new app or anything like that, because they've created that shared experience across all the portfolio entities. So that'd be one example. That's similar in e-commerce too. It doesn't just have to be the delivery or kind of the gig economy space. There's a lot of consolidation going on in digital and e-commerce properties right now. So, one portfolio company in the travel space, might have verticals for hotel, airlines, et cetera. And so can create that centralized wallet experience so that, regardless of what type of service you're booking for that travel, you don't have to go through the hassle of putting in a new payment information and potentially churning and abandoning that card experience to go somewhere else.
Is there, I'll sort of close on this, although it's a massive open-ended question, but, this actually isn't meant to tie back into blockchain, but it just seems like there is absolutely this future where everything is almost like ledger based, right? So I did this transaction, that transaction, and then there's just some like sort of like grand macro reconciliation. Like I want that, and then someone else is doing this, and then they're all kind of like connecting. Is that something that's talked about in sort of the brain trust of different like kind of payments and fintech? Kind of in the mind share of like the leaders of those companies, like how this will all sort of be one grid in the future?
So one grid from like the reconciling of transactions perspective, or connecting all the pipes, if you will?
Yeah, connecting all the pipes.
Yeah, that's an interesting question. So the short answer, does it get talked about? I'm sure, but not in some of the rooms that I'm in. But I think it's a really good question. And it's got to happen. We see it in the United States today with just the different banking organizations, the different card brands like Visa and MasterCard. Of course, that's global too, but these are all independent rails, if you will. And so,
sure.
Yeah. So from as a merchant doing business, back to, one element of your question, the reconciliation side of things is an extremely painful process, especially if your business and you're using multiple processors and you're supporting different payment methods. And now you got this host of data, transactions across different providers. How do you reconcile it and pull it all together? So I don't personally think that's, at the infrastructure level, that's something we're going to see in our lifetime. There's too much financial interest at stake, but again, to tie it to blockchain, that's where, from a disruptive standpoint, technologies like that might have the potential to come in. But again, that requires everybody having a seat at the table and deciding to play ball together. And I'm not sure we'll see that in our lifetime.
Yep. Cool. And, obviously in this conversation, we've got a lot of good information that's been, I really actually am not trying to just be like, think harder, like be weirder. So it's not meant to just be like, let's see how payments all of a sudden equate to ... what's going to happen when we live on Mars, although that's interesting. What will the form of currency and transaction be then? But there's something kind of, I think that's maybe a future sort of innovation and iteration around, I guess that maybe that is the blockchain installation, right? The settlement layer, right? So we're going to kind of have all these transactions, and people still know that they have value that they're giving and they have value that they're receiving, and all the different intermediaries in between there, as those start to become fewer and fewer. If from a positive perspective, that's good, because then the transactions happen faster, there's less friction, and so on and so forth. So we'll kind of see how that unfolds. But I guess closing thoughts. Let's move to the close. Any last plugs, thoughts, experiences that you feel are worthy of sharing in the last 60 seconds? You have the floor.
In the last,
take as long as you want. I'm good. It's Friday afternoon.
I'll have to hop off here in just a second anyways. No real closing insights or anything like that. This has been fun. Enjoyed just having the conversation back and forth, and appreciated it. Let's geek out on this stuff again sometime soon.
And honestly, I told you I was going to ask you about payments, and I ended up getting into kind of your sort of career journey and that arc. And I think that's of interest and of value to many people. I hope they kind of pay attention to that, because there is, there's definitely excitement and fulfillment in startup land. You don't have to just take the traditional route. And so I think that was, I appreciate you sharing that. And man, thanks for joining, and have a good rest of the afternoon.
Yeah, absolutely. Thanks, Nick.
Awesome. Cool.
Take
Thanks,
care.
Daniel. See you.